I'm Alan Kenny, Editorial Director with REIT.com, and we're in Washington, D.C. at NAREIT's headquarters. Joining me is Stephanie Krewson-Kelly, Head of Investor Relations with Corporate Office Properties Trust and author of the new book, The Intelligent REIT Investor, How to Build Wealth with Real Estate Investment Trusts. Now, Stephanie, the first books that I ever read on investing were by Peter Lynch, a famous fund manager back in the 80s and 90s. And these were books on how to make money investing in companies that you kind of assume they already knew what they did, IBM, GE. This book kind of breaks REITs down from the very start, how they operate, legal guidelines. Is that kind of the right description of what you were going for?
Yes, it is, Alan. There are many fine books out there, beginning with Ralph Bloch's book on REITs, investing in REITs. But all of those sources presumed some fundamental level of knowledge about REITs. And when you think about it, REITs are so intuitive in that real estate's intuitive. You see office buildings, you see shopping centers. But when it comes to investing in them, there's a whole lexicon that's unique to our industry, and that's what people were missing, the nuances, which once they're explained in easy terminology with a few examples, they make sense. So the purpose of my book is to make approaching books by Ralph Bloch and others much more accessible, so that after reading my book, you will have the industry knowledge, the lexicon, and the basic tools you need for those other works to resonate much better.
So as someone who works in investor relations, how do you think that the understanding of REIT investment has changed, say, in the last decade or so?
It's come a long way, Alan. When REITs were added to the S&P 500, that made a lot of money managers who otherwise wouldn't give REITs any attention. They obviously had to start indexing to it if they indexed to S&P funds. So that was huge, and that was, I think we all acknowledge, as a watershed event for demand for REIT shares. But because they were still part of financials, a lot of REIT investors were really thinking that they were investing in financials that had great yields and less volatility. And so over the years, we've definitely seen more institutional interest, more high net worth individual interest, and it's become more intentional. And you see that when you see the bifurcation of how REITs trade, the large caps, the mid caps, the small caps. People are realizing that they're across the 200 plus REITs, there really is sort of a flavor for however they want to invest.
Okay, so then what are some of the common misperceptions or misunderstandings that still persist today about REITs?
That's an excellent question, Alan. Believe it or not, I still get some inquiries as to when we're filing our 20K or whatever it is that LPs file. That's definitely the minority, though. More pervasive still is the misunderstanding that REITs are, quote unquote, directly affected by interest rate changes. Cohen and Steers and others have done studies which have proven that in a rising interest rate environment, equity REITs tend to outperform other investment classes. So my hope is that when REITs begin trading as real estate in the S&P GICS code, that investors, generalists in particular, will realize that an increase in the FOMC Fed rate should not translate into lower profitability for the equity REITs, because as we know, that's just not true.
And you mentioned GICS. Real estate is going to be elevated to a headline sector under GICS on September 1st, the timing of which coincides with the release of your book. So, yeah. So tell me, how do you feel that the move there with GICS is going to influence perceptions of REIT investment?
Well, I'm already seeing, in my position as head of investor relations, I'm already seeing the pre-effects, if you will. All of our meetings this year, whether they're non-deal roadshows or at conferences such as NAREIT's conference in June, the number of requests we have for meetings with generalists has just gone through the roof. I think that's very positive. Now, these folks haven't shown up as shareholders yet, by and large, but they certainly are sharpening their pencils and doing their homework. There are a lot of different views as to how important the GICS code will be for our industry. I think it will be a gentler building of demand than what we saw after REITs were added to the S&P 500, but I think it will be just as pervasive and just as profound. So I think it's a very strong positive in building demand for REITs.
Thank you so much for your time, Stephanie.
Thank you, Alan. I appreciate it.
And for more on this and other REIT news and analysis, be sure to visit REIT.com.